The Bank of Canada just made a big move. They've cut interest rates for the first time since March. So let's break down what this means for you, your wallet, and the housing market. Hi, my name is Deloshan, and welcome back to another episode of Real Estate Watch. On Wednesday, the bank lowered its key rate by 0.25%. So from 2.75 to 2.5%. So why does this matter to you? Because commercial banks set their lending rates based on that policy rate. So if the Bank of Canada cuts borrowing costs for Canadians, for mortgages, line of credits, and loans can start to come down as well. And the bank says that the economy is showing signs of weakness. Unemployment has climbed above 7%, GDP numbers are soft, and the trade wars with the US are putting extra pressure on Canadian businesses. At the same time, inflation is still under control, sitting comfortably between 1% and 3%. So that gave the bank some room to cut rates to support growth. And Governor Tiff Macklem made it very clear. Tariffs are dragging down the economy, and while interest rates can't erase that problem, the bank can help Canadians adjust by making borrowing cheaper. So still, the bank is very cautious. They don't want to cut too aggressively in case inflation flares back up. So you might be asking, is a recession coming? Well, economists have warned that if tariffs keep escalating, Canada could fall into a recession. A recession means 2 straight quarters of economy shrinking, usually with unemployment and weaker consumer spending. And right now, the Bank of Canada isn't predicting a recession under the current trade war conditions. Growth will likely stay slow, around the 1% in the second half of this year, which Macklem admits that it won't feel good, but it's still growth. And if tariffs escalate further, though, that could push us into a recession territory. So what's my takeaway on this? If you're renewing a mortgage, carrying debt, or thinking of buying, these rate cuts could ease the borrowing cost a little. But the bigger picture is still uncertain. Tariffs, trade wars, and slow growth are all risks hanging over our economy. So, do you think this rate cut will actually help Canadians, or is it too little, too late? Leave your comments below, and don't forget to hit like and subscribe for more videos. And I'll see you in the next video.